Welcome. Today we're diving into the world of finance to explore two major career paths: investment banking and corporate finance. These fields are often mentioned together, but they serve very different purposes within the financial industry. Whether you're a student considering your future, professional looking to switch careers, or just curious about how big financial decisions are made, this video will break down the key differences, similarities, and what each path involves. Let's start by understanding the basics of each field before we compare them in detail. Investment banking is a specialized segment of banking that helps organizations, companies, and even governments raise capital. Investment bankers act as intermediaries between securities issuers and investors, and they also provide strategic advisory services for mergers, acquisitions, and other financial transactions. Their work is fast-paced, high-stakes, and often involves long hours, but it's also known for high compensation and exposure to major deals. Let's look at what investment bankers actually do day to day. Investment bankers are involved in a variety of activities. They help companies go public through initial public offerings, IPOs, assist in issuing bonds, and facilitate large-scale mergers and acquisitions. Their role is to analyze financial data, prepare presentations, and negotiate deals. They also conduct due diligence to ensure all parties are making informed decisions. The work is demanding, but it offers a front row seat to some of the biggest financial transactions in the world. Corporate finance, on the other hand, is focused on managing companies' internal finances. Professionals in this field work within corporations to plan, analyze, and control the company's financial activities. Their main goal is to maximize shareholder value by making smart investment and financing decisions. This can include budgeting, forecasting, managing cash flow, and evaluating investment opportunities. Let's see what a typical day looks like for someone in corporate finance. Corporate finance professionals are responsible for a range of tasks that keep the company financially healthy. They create budgets, analyze financial statements, and assess the profitability of projects. They also manage relationships with banks and investors, and ensure the company has enough cash to operate smoothly. Unlike investment banking, the focus here is on the long-term financial health of one company rather than facilitating deals between multiple parties. Now that we've covered the basics, let's highlight the core differences between investment banking and corporate finance. Investment banking is primarily external-facing, working with clients to execute large transactions. Corporate finance is internal, focusing on the financial health and strategy of a single company. The pace, work environment, and even the skill sets required can differ significantly between the two fields. Work environment in investment banking is known for being intense and high pressure. Long hours, tight deadlines, and a fast-paced atmosphere are the norm. In contrast, corporate finance roles tend to offer a more predictable schedule with a focus on steady, ongoing financial management. While both fields require attention to detail and strong analytical skills, the day-to-day experience can be very different. Compensation is another area where these fields differ. Investment bankers are often rewarded with high salaries and substantial bonuses, reflecting the demanding nature of their work. Corporate finance professionals typically earn less than their investment banking counterparts, but they benefit from a better work-life balance and more predictable hours. The choice often comes down to personal priorities and lifestyle preferences. Both investment banking and corporate finance require strong analytical and quantitative skills. However, investment bankers also need excellent negotiation and communication abilities, as they frequently interact with clients and other stakeholders. Corporate finance professionals, meanwhile, must excel at internal communication, strategic planning, and long-term financial analysis. Both paths value attention to detail and the ability to work under pressure. Career progression in investment banking is often structured, with analysts moving up to associate vice president, director, and managing director roles. Advancement is typically tied to performance and deal-making success. In corporate finance, career paths can vary more widely, with opportunities to move into roles like financial planning and analysis manager, treasurer, or even chief financial officer. Both fields offer room for growth, but the routes and timelines can differ. Most investment bankers and corporate finance professionals have strong educational backgrounds, often with degrees in finance, economics, or business. Investment banking roles may require advanced degrees like an MBA, especially for higher-level positions. Corporate finance roles can be more flexible, with opportunities for those with accounting or other business-related degrees. Certifications like CFA or CPA can also be valuable in both fields. Investment bankers usually work for large investment banks, boutique advisory firms, or financial services companies. Corporate finance professionals are employed by corporations across all industries, from tech giants to manufacturing firms. The work setting can influence the culture, pace, and opportunities available in each field. Key difference is the level of client interaction. Investment bankers spend much of their time working directly with clients, pitching ideas, and negotiating deals. Corporate finance professionals, in contrast, focus on internal stakeholders such as department heads and executives to align financial strategy with business goals. Investment banking is all about deal-making, structuring, negotiating, and closing high-value transactions. Corporate finance, on the other hand, is more about ongoing management, ensuring the company's finances are healthy and supporting long-term growth. Both are critical to the financial ecosystem, but their day-to-day focus is quite different. Lifestyle in investment banking is famously demanding, with 70 to 100-hour workweeks not uncommon, especially for junior staff. Corporate finance roles generally offer a more balanced lifestyle with standard business hours and fewer late nights. This difference is a major factor for many when choosing between the two paths. Job security can also differ. Investment banking is closely tied to market cycles, so job stability can fluctuate with economic conditions. Corporate finance roles, being part of a company's core operations, tend to be more stable even during downturns. This stability can be appealing for those seeking long-term career security. Both fields offer excellent learning opportunities but in different ways. Investment banking exposes you to a wide range of industries and complex transactions, providing a broad perspective on the financial world. Corporate finance allows for deep expertise in one company or industry, with a focus on strategic decision-making and operational improvement. Investment banking teams are often hierarchical with clear roles and responsibilities. Analysts, associates, and directors each have defined tasks. In corporate finance, teams can be flatter with more collaboration across departments. This can influence the work culture and how projects are managed. Both fields rely heavily on technology, but the tools can differ. Investment bankers use advanced financial modeling software, databases, and presentation tools to analyze deals and pitch to clients. Corporate finance professionals focus on enterprise resource planning, ERP systems, budgeting software, and internal reporting tools to manage company finances. Investment banking is highly regulated, with strict compliance requirements to protect investors and maintain market integrity. Corporate finance must also adhere to regulations, but the focus is more on financial reporting standards and internal controls. Understanding the regulatory landscape is essential in both fields. Risk management is crucial in both investment banking and corporate finance, but the types of risks differ. Investment bankers manage market, credit, and deal risks, ensuring transactions are profitable and compliant. Corporate finance professionals focus on operational, liquidity, and strategic risks to safeguard the company's long-term interests. Networking is vital in both fields, but investment bankers often build relationships with clients, investors, and industry experts to source deals and opportunities. Corporate finance professionals network internally and with external partners like auditors and banks to support the company's financial goals. Travel is more common in investment banking, especially when meeting clients or closing deals in different cities or countries. Corporate finance roles are usually more office-based, with occasional travel for meetings or conferences. This can impact your work-life balance and lifestyle preferences. Success in investment banking is often measured by the value and number of deals closed, as well as revenue generated for the firm. In corporate finance, performance is evaluated based on the company's financial health, cost management, and achievement of strategic goals. Both fields require a results-oriented mindset, but the metrics differ. Work-life balance is a major consideration. Investment banking's demanding hours can make it challenging to maintain personal time, while corporate finance roles usually offer more flexibility and predictability. This difference often influences career decisions, especially for those with family or outside interests. Both fields offer strong exit opportunities. Investment bankers often move into private equity, venture capital, or corporate development roles. Corporate finance professionals can advance to CFO positions, move into consulting, or transition to other areas of business management. The skills gained in both paths are highly transferable. Investment bankers play a key role in shaping industries by facilitating mergers, acquisitions, and capital raising. Corporate finance professionals drive internal growth and efficiency, ensuring companies remain competitive and financially sound. Both contribute to the broader economy in unique ways. Stress levels can be high in both fields, but for different reasons. Investment bankers face pressure from tight deadlines, high expectations, and the need to close deals. Corporate finance professionals deal with the responsibility of managing a company's finances and meeting long-term goals. Managing stress is important in both careers. The work culture in investment banking is often described as competitive, fast-paced, and high-energy. Corporate finance tends to be more collaborative with a focus on teamwork and long-term planning. Understanding the culture can help you decide which environment suits you best. Decision-making in investment banking is often rapid, with a focus on seizing opportunities and closing deals quickly. In corporate finance, decisions are more deliberate, involving careful analysis and alignment with the company's long-term strategy. Both require sound judgment and the ability to weigh risks and rewards. Strong communication skills are essential in both fields. Investment bankers must clearly present ideas to clients and negotiate terms. Corporate finance professionals need to explain complex financial concepts to non-financial colleagues and executives. Effective communication can set you apart in either career. Analytical skills are at the core of both investment banking and corporate finance. Investment bankers analyze market trends, company valuations, and deal structures. Corporate finance professionals focus on financial modeling, forecasting, and performance analysis. Mastering these skills is vital for success in either field. Ethics play a significant role in both careers. Investment bankers must avoid conflicts of interest and ensure transparency in transactions. Corporate finance professionals are responsible for accurate financial reporting and upholding the company's integrity. Ethical lapses can have serious consequences in both fields. Both fields are evolving with technology and market trends. Investment bankers must adapt to new financial products and digital platforms. Corporate finance professionals leverage data analytics and automation to improve efficiency. Staying current with innovation is key to long-term success. Investment banking is inherently global, with deals often spanning multiple countries and markets. Corporate finance can also have an international dimension, especially in multinational companies. Understanding global trends and regulations is increasingly important in both fields. Job satisfaction varies by individual, but many investment bankers enjoy the excitement of deal-making and the financial rewards. Corporate finance professionals often appreciate the stability, work-life balance, and opportunity to make a lasting impact within a company. Knowing what motivates you can help guide your career choice. Both investment banking and corporate finance offer strong, long-term career prospects. The skills and experience gained are highly valued across the financial industry. As markets evolve, both fields will continue to play essential roles in shaping the business landscape. Choosing between investment banking and corporate finance depends on your interests, strengths, and career goals. If you thrive in high-pressure environments and enjoy deal-making, investment banking might be for you. If you prefer strategic planning and want to help shape a company's future, corporate finance could be the better fit. To recap, investment banking focuses on external transactions, high compensation, and a fast-paced environment, while corporate finance is about internal management, stability, and strategic growth. Both paths offer rewarding careers, but the day-to-day experience and long-term outlook can be quite different. Investment banking is ideal for those who are ambitious, enjoy working under pressure, and are motivated by financial rewards. If you like the idea of working on high-profile deals and don't mind long hours, this could be the right path for you. It's a demanding but potentially very rewarding career. Corporate finance suits those who value stability, enjoy strategic planning, and want to make a long-term impact within a company. If you prefer a balanced lifestyle and the opportunity to grow within one organization, corporate finance offers a fulfilling career path. Both fields develop highly transferable skills such as financial analysis, communication, and problem-solving. These skills are valuable in many areas of business and finance, giving you flexibility to pivot your career as your interests evolve. There are some common misconceptions about both fields. For example, not all investment bankers work on Wall Street and not all corporate finance roles are routine or boring. Both offer dynamic, challenging work with opportunities for growth and advancement. Ultimately, both investment banking and corporate finance are vital to the financial world. Your choice should reflect your personal interests, strengths, and long-term goals. Take time to research, talk to professionals in both fields, and consider what environment will help you thrive. Thanks for joining us on this deep dive into investment banking versus corporate finance. We hope this breakdown has clarified the differences and helped you consider which path might be right for you. Remember, both fields offer unique challenges and rewards, and the best choice is the one that aligns with your personal and professional aspirations.